let's talk about the accounting for the cost of buildings. This is the plant portion of PP&E, right? This is your PP&E. It's this one right here, the plant portion of your PP&E, sorry. Okay, so when you account for the cost of a building, this could be an administrative office, it could be a warehouse, it could be a manufacturing facility that you use to bottle beer or to pack boxes or ship out whatever it is you're in the business of doing, right? That building is a plant for you, and you have to account for that plant as a long-term asset. When you do that, you account for the cost of preparing the building for its intended use, just like we did with land. This is just going to be, this is the general rule, right? This is just the general rule for long-term assets, okay? So you've got the cost of the building. This is the sale price, okay? Any realtor commissions, fees, anything like that. Also, just part of your cost, right? You have to pay those commissions. You have to pay any realtor's fees, any licensing, any property, anything like any property taxes, property licensing, anything like that is going to be included in this. And then you have remodeling costs. Let's say that you buy a warehouse, but you need to have a more modern, you need a more modern assembly line put in. That remodel would be a part of that cost. If you needed to repaint, if you needed to, let's say you bought a building from the 70s and you needed to strip the paint in it because it could have contained some kind of toxic chemical or something. Maybe it has lead in the paint, or you've got asbestos insulation in the building, and you have to remodel all that. Those would all be costs of your building. They would all go into your new historic cost. Okay, so buildings, not too terribly difficult. And equipment, this is the next one. So you have P, P, and E. This is the E, right? This is equipment, okay? So when you account for the cost of equipment, like machinery that you use in manufacturing, vehicles that you use for delivery, vehicles that you use in your everyday operations, any furniture that you have, computers, any fixtures, the cost of preparing the equipment for its intended use. So, again, that's that general rule for long-term assets, right? It's just that whatever it costs us to get it ready to actually use in our primary operations is going to be included in our cost. These are things like sales tax. We have to pay the sales tax, so we can't use it, right? Shipping, this is what we talked about in the last chapter, right? This was freight in. Look back in chapter 5 for that, chapter 6, if you're interested in learning more about freight in. Basically, it's your shipping and handling, right? It's your S&H, your shipping and handling. Any assembly, because the fact of the matter is that when you own a business, sometimes you're going to order a piece of machinery that you cannot assemble yourself, right? That you don't have anybody on staff that is skilled enough to assemble that equipment in a way that it is safe for use. So you're going to have to pay somebody to do that. If you have to pay to prepare the site for use, so let's say you order a piece of equipment that weighs 4 tons, you can't just put that on a normal concrete floor, right? You have to build a reinforced concrete pad to place that on so it doesn't sink into the ground. That is going to be part of your cost. Another one that's sneaky is testing. I didn't put this one on here, but sometimes you'll see this one sneak into a list, and it needs to be included in the cost, okay? If you have to test the equipment, right? So let's say you've assembled it, now you have to do a test run with it to make sure it works. The cost of that test run is included in your cost for your equipment. Any recurring costs like insurance for the equipment, property taxes, these are expensed. We do not capitalize these, we expense these, okay? So when you have to perform maintenance on a piece of machinery, let's say the machinery that you bought has to have its widgets lubricated once a year. You have to pay to do that. We would not capitalize that, meaning we wouldn't recognize that as an asset and then slowly expense it. We're just going to expense it when it occurs, okay? So this is just a quick example of the cost necessary to get the equipment ready for use and the total cost, right? This is just going to be total, okay, or historic cost, okay? So this was our sale price. This is what we paid for it. We paid $6,500 in taxes. We cost $800 to ship it, right? This is the freight in, okay? Shipping insurance cost us, installation cost us, and then annual insurance is going to cost us. But remember, this right here is getting expensed, okay? Not capitalized. Okay. So we will move on to the next video, and in the next video, we'll talk about intangible assets and the differences in those.